Hello, colleagues. Hello, everyone, and welcome to our today's streaming session. So I'm Stan. I will be your host today. Hopefully that you hear me well and see my video. All right. So yeah, this webinar, well, that's a streaming session, right? Is intended for educational purposes only. By no means it can serve as a trading or investment advice. So yeah, please consider that when perceiving this information. I am Stan, I'm a senior trading specialist at Exness, so today I will share with you some insights, some ideas about the market. We'll go through narratives, through economic calendar. We will help you get prepared for the market and maybe build any meaningful ideas that you can actually build in the marketplace. All right, so for those who are new in our streaming session, so I remind you that every Tuesday at Exness here, we hold streaming live market analysis sessions, and so you can subscribe to the channel, give us a like for YouTube algorithms, invite your colleagues, invite your fellow traders. Don't just keep it for yourself. We appreciate you being here in the community. We value that you're here in the community. So, all right, I guess that let's start it with our analysis. Without further ado, let's go straight to the markets. And as usual, the streaming time. So my bell is opening bell that I use all the time while starting the streams. All right, so let's get started. So hopefully that you see what I'm showing you right now. That's Exness terminal. And let's get started with understanding of where capital flows today, what's probably on the list, what would probably be on the list. So let's get started with American dollar index. So, and the first pattern that we see here in the market is the consolidation of the American dollar right now. So this week, so nothing is actually changing here. So market is anticipating the CPI publication, which is inflation rate for tomorrow for the United States. So ahead of the big news, market is basically quiet. So it's not moving much. It's holding still. It's holding within the muted price action. Sometimes, of course, that doesn't mean that no action is happening whatsoever. Yes, it is happening. But the big money usually stays out of the game ahead of big publications. So today we did have publication for the British pound, so labor market for the UK actually. And you see that the reaction of the British pound was down. So American dollar had grown against the US dollar. We got Joyce here. Hello, Joyce. Nairobi, Kenya. So nice to see you here, our regular listener. So yeah, appreciate you being here today. So Joyce, what's on your list today? Just give us your insights in comments. All right, while you are writing, hopefully, so we are proceeding to our analysis. All right, let's start with economic calendar. So every time we start with economic calendar, because that makes a lot of sense. You need to be prepared. You don't want to pop up for any important news. You don't want to be unprepared. Traders who make homework, they usually are much better prepared for the market, so they are not prone to big movements, sudden movements, especially day traders. All right, so today is Tuesday, June 10th, 2025. So, all right, so in the morning we had unemployment rate for the British pound as well as employment change. So that's a labor market data for the UK. So it was, as you see, actually was 89K versus 80K forecasted, slightly better than anticipated, but not that good actually. So the British pound was not able to rise. So tomorrow is super important day because tomorrow is the inflation day. So inflation publication is going to be published tomorrow. As you see, for example, the consensus forecast is 0.3% for core inflation rate. CPI wise, so also this is the situation. Okay, so basically that's published on the bls.gov website, so Bureau of Labor Statistics of the United States. And let's break down the previous numbers, if you will. So just take a look at 0.2, right? The previous number was 0.2. Let's check the summary of where from this number was actually aggregated. So as you see, April 2025, most of domains had displayed growth except for fuel oil. energy commodities, food away from home. Oh no, sorry, it was positive actually. So yeah, food at home, so minus 0.4. So what does that mean? So that means that people they are not eating much from home. They are not eating out. But that's the American statistics, guys. So I don't know about other countries. But basically, all numbers are generally positive. So there are no big negative numbers. For example, in the previous year, we did have negative fuel oil numbers. Now that basically all numbers are positive, so they're holding pretty steadily. And if you take a look at the chart, for example, of the consumer price index, you see that, for example, if we filter that out since 2024 2025, well, it's basically holding well, though we did have some negative number in March, so that's a deflationary sign. Not a big deal. So it hadn't grown to anything more substantial. So the market seems to continue consolidating in this growth phase. All right. So next thing that we will go through is the probabilities of interest rate change for the upcoming meetings of the Federal Reserve. All right. So today is June. The upcoming meeting is in June, right? June 18th. And you see that the 99% of traders think that interest rate will stay unchanged. So we're pretty much aware of that, so that's not a surprise. The same is for July, but for September, it's already the intrigue. You see that currently this number, the number of traders believing that the interest rate will not go down in September, it is increasing actually to 36% from all the way from 25. And if we go to the historical tab, you see the same picture all over again. So the hawkish scenario is increasing a little bit. So theoretically, that should support the US dollar, but the US dollar now is the subject of a sell-off every time when politicians speak, every time when President Donald Trump speaks. So he actually scares the market, and the American dollar is falling. So today we got the interesting relationship between the bond market, especially long-end bonds, and the American dollar. So American dollar basically is falling along with bonds. So that's a very unusual situation. That means that the money is not flowing into the US markets anymore, at least such actively like it was before. Japanese yen as a result benefits from that. So I was thinking about the potential breakout for the Japanese yen, but it seems now that the market is not quite ready for this breakout. So the attempt of a breakout had happened today in the night, but it was not sustainable. You see that after the breakout, after the test of the areas, so market had plummeted immediately, which shows a relative strength of the Japanese yen. So the Japanese yen is very resilient, so it's not going away anytime soon. It's not weakening anytime soon against anything, including the American dollar. As you see, we got here USD JPY, the same picture. Well, it was growing a little bit, but it seems that this growth is really not sustainable. So it cannot basically grow against the Japanese yen. So the Japanese yen is kind of holding steady. So what does that mean basically? So currently there is a different relationship. So Japanese yen, the rising of the Japanese yen starts to have a negative correlation with the bond markets, or positive correlation with yields of American bonds. That's an interesting, unusual situation. All right, we got new people here on the stream. So hello, Toof G. Okay, whether I spell your name right or wrong. So hello, where are you from, by the way? So that's your first time in our streaming session. All right. Yeah, thank you for joining us. We appreciate that. All right, let's talk opportunities today. So Bitcoin, I think, was the most interesting play this week and the previous week. So as you see that it was just bouncing perfectly off the 20-day 20-day Bollinger, which is the 2 standard deviations. Of course, now that's a hindsight already, guys, but I just want to show you the mechanics of the reversal. So when you have a trending market, the strong trending market, when it's moving, in a steady pace, in a steady trend. So that's exactly how the beginning of the swing happens. So if we switch to 30-minute chart, for example, you can see that it gives us 3 beautiful pivot points as it goes. So first of all, so the first test of the lower board of the Bollinger had happened on June 7th. So that's the day of the recovery, the first day of the recovery. Then the next one happened on Sunday, which is day before yesterday. And another one had happened on Monday, basically, June 9th. So 3 beautiful pivot zones. So they represent potential entry opportunities. So not all of them lead to immediate continuation, but all of them usually represent some buying activities, some buyer. Can you actually buy here at the peak? Well, you can try so. I'm not sure that will be a good idea necessarily, but you can try, because you see that Bollinger actually collapses into the small range, and basically the potential retest zone is located right below at 109,500 something. So that's the potential level. So basically, yeah, if you want to jump in, I think that's also pretty interesting, pretty decent situation. So for example, the market may continue moving higher towards the high here, because it's actually trending, it's in a swing. And we got some, I think we got some space between the market trying to achieve the upper band of the Bollinger. So it's still, we have plenty of space between the current entry, which is 109, and the 111. So there's plenty of space which we can potentially play out. I'm not a big fan of joining the momentum, so I rather focus on taking the confirmed setups, for example, just it was here, you know, at the beginning of the session. So however, for example, if we switch to the 5-minute chart, we can think about you know, potential entry which might happen as a result of you know, test of the formation. So for example, it starts building some formation, it retests this formation, and it goes all the way up. So that might be the potential entry point too. So just take a look at how exactly this has happened before. Market bounces, then it tests the formation like it's shown here. It gives you another entry point. So such entry point might be just perfect, just exact. You don't need to place a huge stop loss here in this zone, so you may patiently wait until the market reverses, goes to the 5-minute chart formation, gives you the entry point in the direction of this trend, following this formation, and that's exactly what I'm searching for all the time. So for example, I will be searching for some kind of consolidation. I don't know the exact shape of this consolidation, but the moment when the price tests the lower boundary of this consolidation might be the potential entry point, something like that. Or it might be conversely, it might not necessarily be like that. It might go higher a little bit, then, you know, make this formation like that, something like that, okay? So there is no rush actually. It's never too late to join a good trend, especially if you're following the flow, if you're following patiently. It might work like that, for example. Also another possible entry, right? So our idea as a trade is not just to find the structural point, for example, just buy all in, right? Place a stop loss below the low. No, we need also to follow the flow. By following the flow, I mean following the price action and tuning your trade, into the strong trend, into the moving market, into the market that actually moves. So that might basically work like that. So I don't know how exactly this formation will work. Or maybe it will even skyrocket, I don't know. So if it skyrockets, that's not my opportunity. For example, it goes higher, right? It's not my opportunity. If it goes like, you know, like a stone thrown to the upside, that's not my opportunity. So in that case, I won't be chasing it. But why am I in the first place tracking Bitcoin? So just let's go to Glassnode and I'll show you a couple of tips actually. Why am I thinking Bitcoin might be a potential upside opportunity? Let me quickly guide you through some fundamentals, or through what we call on-chain analysis data. So let's go to dashboard, let's go to Bitcoin, and I will show you MVRV indicator. So that would be MVRV. Just give me just a sec. MVRV ratio, okay. Market value versus realized value chart. All right. So what I'm showing you is that the overall value of market value versus realized value is 232. So that means that it's not in the overheated zone yet. So not many market participants are trying to sell. Not all of them are in profit. So some of them are in profit, some of them are still not. So whenever market reaches the peak, for example, 3.4, like it was back in 2021, like it was also in March 2024 last year, so it was 2.7, so now it's 2.3, so it's not too late. Also, that's another one which is called MVRV pricing bands. So you see that the position of Bitcoin here between these lines is slightly below the yellow line. The yellow line is 2.4, that's called the bullish sentiment or the bullish line, meaning that above this line the market is in a strongly bullish phase. Now we are kind of anywhere between orange and the red line, which means that we're in a bullish phase also. So that's not a FOMO yet, so that's not a FOMO mode, but that's not a bearish mode. So that's pretty much a steady bullish flow which happens here on Bitcoin. All right, going back, also I will just tell you that ETF flow is also pretty good. So it's not that bad. I mean, money is going to Bitcoin from the ETF perspective. And so that's basically pretty much bullish, okay? Pretty much bullish. All right, so everybody trades gold, I think, right? So the majority of our traders, they're trading gold. So the gold will be one of the top instrument that we usually review. So, you know, I would say silver is more interesting right now, so if you will, but if you insist on gold, we will go through gold. Silver, by the way, had broken through the long-term range, which it has established, you know, for maybe more than 6 months, but let's start with gold. So gold basically doesn't show this great signs of flow, the good order flow, because the buying activity just not enough. So it just, the yesterday's action, it has shown a lot. It was pretty choppy, it was pretty sloppy, you know, going back and forth with much amount of noise just around the support. If gold was such a good buying opportunity, so I think it would be purchased with a much greater aggressiveness. But I was actually intending even to short gold yesterday, and I made some intraday short, by the way, here. So it was the false break. I thought it would be a bullish trap a little bit, so and that was actually a bullish trap. So just let me show you. There was an intraday pattern, which I call the bullish trap. Exactly that happened here. I was entering the position right here, and I protected this position, so this position was closed by the break even. So no flow was displayed, nor to the downside nor to the upside. Well, a little bit to the upside flow was shown, yes. Starting from 3,311 towards 3,335, $25 up. Not a big deal, guys. So as you see, gold is very quiet. It's losing volatility, it's losing momentum. And if you want to trade it, so that would be incredibly, I think, difficult to, or frustrating maybe, to find an entry point. Because whenever gold enters such a market condition, just take a look at it. It loses volatility, right? If we build average to range indicator, let's put parameter of 20. It just loses volatility whatsoever. Volatility is pretty low. It's losing. It was high basically, so it's not pretty high now. 59. Historically, that's high volatility, but it's diminishing from the peak. It was 72. Now it's 59. Why? Because a lot of doji bars are showing in the price section. A lot of doji bars are showing up. So I would say that it's a tricky market right now. If you still insist, if you still want to trade it, probably you need to monitor for potential liquidations and sell-offs, something like that. So for example, market goes higher, then it sells off and you know, tests the lower boundary of the Bollinger, something like that. It might work like that, I think. Or conversely, so if it breaks to the upside through the range, establishes the false break, then gets back to the range. So I think that would be the pretty tricky market. At the same time, we got the second day of the recovery from the support. The first day was yesterday, now it's the second day. So if the flow continues, I know if the buyer continues to actually purchase gold, it might continue going up. So today, I think today we have the negotiations of the US and China in London, right? So about the rare earth minerals. Usually gold reacts every time when US negotiates with China. So maybe that will happen. So, and you see that it's growing since the beginning of the day. It's on the growth. So, but what I observe basically for gold and for any other instrument, it starts moving on the Asian session. So guys, early in the morning, the move is starting, and then it's just collapsing in the European and the American session. So it just like stops, okay? It's not moving. And the same pattern was visible today. It started moving at the beginning of the session. Just at the beginning of the session, it was here. It consolidated for a while. Then it had broken on the third hour or the fourth hour. For those of you in the Asian time zone, guys, that might be pretty interesting. Pretty interesting setup, meaning that Asian traders seem to be moving markets right now. European traders, American traders are sitting on the sidelines. They're doing nothing, basically, pretty much doing nothing. So I won't be surprised if this market basically does nothing, if it just consolidates for today. But tomorrow in the Asian session, it might start moving. So yeah, that's a pattern. That's a behavior of this market for today, for this week. Tomorrow is CPI basically, so CPI might become a driver. So inflation rate for the US might become a driver. Usually, if it's tighter or tougher than anticipated, so that might lead to theoretically to the growth of the US dollar. However, we see from the practical observation that American dollar is not growing, even with the strong inflation. It's continuing to sell, to be sold and sold and sold again. So with that, we can moderately assume, or we can, modestly assume that gold might react actually with a growth on the publication of CPI. So something like that, I think, might be potentially visible. So if you find an opportunity to form a position early in the day, first 3-4 hours in the day, a long position, you can absolutely carry it through CPI publication, though it will be a pretty risky because volatility increases. But you may carry it throughout the day tomorrow. Today, I think that's already too late because you see that the move might be pretty exhausted already. So Asian session was the beginning of the move. Now it might be pretty exhausted. All right, speaking of the market structure for gold for the daily chart. So we've seen the new peak, yet another peak on June 5th. There was an upswing. The new upswing started to develop since May 29th. One day down, another day was, I guess, was Sunday, right? And yeah, we got 2 days here, 3 days of consolidation, and it's landing on the support. So with that, I can say that we might potentially get a new swing to the upside. Maybe, I don't know how aggressive it might be, but from a structural standpoint, we're still in an uptrend. Uptrend is feeling pretty steady, not very aggressive, but it's pretty steady. So it works just like that, and we are in the potential dynamic support zone right now. So if you see any pattern popping up here, you can you would rather, or probably you should rather, maybe play a long position rather than short position. However, also the downswing may also continue to be moving downside, but it doesn't seem so, at least for now. Market seems to be protecting the lower zone very. At least nobody pressures it, right? Nobody sells it off. So yesterday it was trying to break the low. It was unsuccessful. So volatility is actually diminishing. It's decreasing. It's becoming lower and lower and lower and slower and slower. So with that, we can suppose that that might be some support in this market continuing to be popping out. By the way, silver, guys. So I was mentioning silver. So it might be pretty interesting. So silver was positioned in the long trend basically since June 2024, the long-term trading range. Let's better put it that way, long-term trading range. I would call it rather diamond formation, but it doesn't matter actually, the shape. The shape doesn't matter. I would say that this trading range was broken not so long ago, basically 1 or 2 weeks ago. So the flow had started to move. here outside of this range. Now we are basically outside, so that's not a already fresh situation. The situation is not fresh, but you see that the aggressiveness of the trend is substantially more visible than for gold. Okay, and if we put average to range indicator, it was bottoming. Now it's moving up a little bit, but it was a bottom. In comparison to gold, you remember that ATR for gold was basically higher, right? So it was peaking. And let me show you. So it was peaking, now it's diminishing. So it might also bottom, show a bottom, but for silver, it was already a bottom. It was already a bottom for some time, and it was close to the previous bottom of March 2025. So this move, I don't say it was predictable. Otherwise, I would made $1 million on that. No, nothing is predictable in the market. But you see that this is the same market structure that we observe across the board over and over again. So market starts to move. It makes the pivot on the correction, so lower band of the Bollinger. It makes the pivot. It establishes the trading range for a while. Establishes another pivot, meaning that it just tests the lower boundary, establishes another pivot, yet another pivot, very narrow. So I guess that was the perfect opportunity, because you see the Bollinger was just as narrow as I don't know what. So it was the narrowest moment for the Bollinger Bands, meaning that you could have placed a very small stop, a tiny stop loss here. Such opportunities, they need to be monitored. If you see such an opportunity, if you see the market Bollinger Bands collapsing, a volatility collapsing just to the bottom, so you can place a tiny stop loss and you get an asymmetrical trading opportunity. It can give you like 20 to 1 profit loss ratio, something like that. You see, when it explodes, when it takes off. I know that's history, guys. I know that. So we don't trade on historical charts. We trade in the real time. That's substantially more difficult. But that's an example of which patterns we might actually be searching for. Do we have something similar on Bitcoin right now, for example? Maybe not. So, but for Bitcoin, we might monitor that, right? So if the Bollinger will get the neckline or something like that, that might be the same pattern. Right, that might be the same pattern. You can basically do the same here, because that's trending market too. So it had shown a lot of pivot points, pivot moments, something like that. Okay, but that was silver. We don't trade historical charts, I know that, but I was going to show you how this pattern basically unfolds. That's kind of situation. Crude oil might be in the same situation right now, by the way. So it had also emerged from the range. It's now located right above the range. It's the, just one bar had closed above the range. That's my, don't care about my drawings. I was just trying to capture the bullish trap, the potential bullish trap. But the crude oil is a momentum-based instrument, meaning that absolutely can try to emerge one more time. How exactly? You see another thing, right? So it had retested the Bollinger, the bottom of the Bollinger, the same situation. So if it comes again, if it establishes this short trading range, so it can break again, something like that. We are in an uptrend, we're in an impulse. So you have two options of operating in this market. So you might join at a pullback, or you might join at a breakout. So both ways are acceptable. The second way is more psychologically viable, because you are working with a moving price. You're not going against the market. But in the first option, so your stop loss might be smaller a little bit, because you place a stop loss below the test. So market just tests the area, starts to pulling back, and you place it just below the test, something like that. Okay, so that might be the pattern. All right, so that's what I will be monitoring for crude oil for the upcoming session. Maybe something like that. More insights on gold, right? More insights on gold. So that's right. Everybody likes gold. For gold, guys, so you see that we got this scenario, right? For gold, we got this scenario for gold. So I would assume that we are standing at the support, the potential support, and you see that the price is basically consolidating within what we may call the triangle or whatever, so it doesn't really matter. So that's a descending formation. It might work like that, you see, so it's losing volatility. So as you noticed, it's losing volatility. So where our best entry point might happen here? For example, if the market continues to consolidate, if it tests the lower boundary of this triangle, if it tests again and it pulls back. So remember, that's a support, that's a strategically important support zone for gold. And if you spot something like that, for example, the false test of the false break of the downside trending line here, you can absolutely try to capture something out of that. Gold is a tricky instrument. It's pretty difficult to trade with short stops, but that's possible. That's not impossible. So just you don't place stop loss of $1. I mean, in terms of price, in terms of asset price, and you can absolutely try to do that. You don't know why I'm trading on the demo account? Because I cannot show you real money accounts according to compliance. I'm not trading it. I'm showing you for the demonstration purposes. So from the compliance standpoint, I cannot demonstrate you any real-time account because this session is intended for educational purposes only, okay? So that's a market analysis session, that's not a live trading session. So I'm not actually trading, I'm not pushing buttons, I'm not buying or selling anything, all right? So these are charts, that's not, doesn't have to do with demo or real. So I trade separately on a separate account. Entry price on breakout of the triangle. There might be two options. The first is on the test of the triangle. So when the triangle is being tested, when the price plummets and it starts to bounce off the lower boundary, I mean here, so that might be your entry point here. So that's not a breakout, that's a retest, that's a false break or the bearish trap. That's one of the things. Another point might be the breakout. I am not a big fan of breakouts, to be honest, because the statistics of breakouts usually is worse than statistics for false breakouts, because false break might be accurate, might be very small. You can place actually tiny stop loss here. When you trade the breakout, it might work like that. Might rotate a little bit. Then it might break. You know, the amount of rotation might be substantial when you trade the breakouts. Usually the statistics of a breakout is not very good. It's like 20% of the outcomes are being successful here. Meaning that, for example, if you place a short stop loss, so the good odds that it will be whipsawed before the breakout happens, something like that. Or you might place it below the triangle, so that's okay, but that would be pretty distant here. For example, if you go 35 all the way, if you place the stop loss of $35, that will be completely okay, right? So you are not going to be whipsawed probably. Will you be here to tell us when to enter? I will be here every Tuesday at the same time. If the setup will happen here at this time, I will definitely tell you. But tomorrow, day after tomorrow, I can't tell you because that's not a trading signal channel, right? That's an educational product that we're not giving you any signals actually. And that's exactly my scenario, right? So that's exactly what I'm gonna trade probably. So I'm wanna do when I'm watching the gold market. So that's exactly the scenario. By the way, some ideas of mine might be found on TradingView. So if you will, some ideas I put there in real time. For example, you can go to TradingView, put here Stanislav Bernukhov in the people section. Okay, here it is, Stanislav Bernukhov, Exness, and I put here some ideas. For example, there was one idea that's not successful yet. I don't know, it might work or not work. That's a swing trading idea, okay? And I put some ideas, some scenarios or suggestions here. For example, crude oil, I'm expecting the bullish trap to happen. Whether it will happen or not, we don't know. So these are basically some scenarios that I put here. For example, here are some possibility for reversal of Nasdaq. That's exactly what happened here, right? Gold might be floating higher, so that I was put into the same scenario. A lot of actually ideas were put here in the section. For example, crude oil. So that was my scenario that I was actually monitoring. So you can check it out. You can check it out on TradingView. Stanislav Bernukhov slash, not slash, it's bottom line Exness. Okay. All right. So speaking of the support or any real-time ideas which you can use. But I do believe that you need to develop your own strategy, meaning your own execution rules, because if we tell you what to do, there are good odds that you will not do exactly the same. Just like, Paul Tudor Jones said once, if I give you the newspaper with tomorrow's price, so the odds are so that you will not execute it, right? So I didn't say that, it was Paul Tudor Jones. So, so I believe that you need to develop your own execution. So where to place a stop loss, how to calculate the risk, how to calculate the lot size, and all things like that. Fortunately, Exness has a calculator. For example, if you enter the position here, that's demo, right? But for example, if you want to buy here, let's imagine that you want to buy here, and you go here with 0.1 lot. You place a stop loss, for example, below at 3,325, for example. That's my stop loss. That would be my stop loss. What would be my loss? It would be $81, right? With that lot size, that would be $83 right now. So with that, I can calculate my risk easily. And the rule of thumb when you enter the positions is to use volatility for calculating stops. For example, if let's say I want to enter the position on the 5-minute chart, how exactly would I calculate my stop loss? That's not a recommendation, that's how I do that. I view the ATR, and we got picks and bottoms here. All right, we got picks, we got bottoms. So the bottom of the volatility is what? The bottom of the volatility is close to 1.5. So you cannot place your stop losses closer than that. If you do so, the odds are so that 90% of the time your stop loss will be captured. So it's recommended, or it's good practice to keep your stop loss basically above the peak. So that would be secure. 7.7. So for some traders, that's too much. All right, at least take the current volatility multiplied by 2. For example, if you got $2 multiplied by 2, you will get $4. So that will protect you against the noise. For example, if you let's say you want to sell, let's say sell, okay, and if you place your stop loss $5 above the current price, which is 3,338, all right, 38. Okay, and my volume is 0.1, so my loss will be $38. So that's how you calculate, how you do the math. That's how you do the math. That's hypothetical example, so don't treat it as a recommendation, of course. Yeah. Okay, we got H. Nabil from Dhaka. Hello. Hello, nice to see you here. The city of Dhaka is with us too today. Now the final piece in the puzzle is here. All right, that's just joking. All right, just appreciate you seeing you here, guys, at our streaming session. All right, guys, let's move on. So what else do we have? So we've spoken about gold. So let's sum it up a little bit. Sum up the performance of gold. What's happening with gold? Gold is losing volatility, as I've said, so it's the flow is unstable. However, it's standing near the support. The support zone is pretty stable. It's pretty obvious here. So market might test actually the lower boundary of this triangle, which is clearly visible on either a 1-hour chart or the, for example, the 30-minute chart. The 30-minute chart probably is a little bit more visible. So it's losing volatility, and as it's losing volatility, it probably will act like that. So it will probably turn into some kind of a sideways action with a further breakout of this formation, which might happen like that, or it might break it to the downside first, then to the upside next. So be careful about those breakouts, because they might be in both directions. We don't know the destination of the breakout. All right, let's move on. For Bitcoin, as I've said, we're still in the window of opportunity for potential long positions, though it's not the beginning of the swing, so it's pretty risky. It's not the beginning of the swing, so pay much attention for the risk management, but that might be the potential option. So whenever it stands in the consolidation in the trading range, if it reverses, so that might provide you with an opportunity for capturing some potential short-term bottom. All right, so what else? So let's move on. Let's talk currency pairs, for example, Euro USD. So it's pretty, so again, a consolidation, that's again a consolidation, though the flow is not very stable, because you see that it's just consolidating right above the support, which is the 20-day moving average. Usually whenever that happens, you see that's a similar thing like here. So it starts to consolidate, then it bounces below the support. And why is this happening? So the flow which is happening right now is not very stable because it's happening outside of the support, though it's still an upswing, so it's not a downswing yet. It's still an upswing. It's just 1 to 3 days of consolidation right below the peak. And I don't know, tomorrow on the CPI, we might have Euro USD continuing to move up. Guess why? Because American dollar is diminishing every time when we got any news release whatsoever. However, if the market bounces to support, to the lower zone of the support, that might be too late. I mean that might be a different story. We might need to wait until it shows the clear confirmation of reversal, something like that, maybe like that. But until then, we are still in active. So until we are moving above the support, so we are still, I think, in the active swing, in the active phase of a swing. So we may consider buying it, for example, tomorrow, if the market will give us any entry point. How this entry point might look like. So let's think about that for a while. So that's basically not very difficult. You see that we're trying to capture the pivot zones. The Bollinger Bands indicator moves here along with the price. The price, for example, might go higher. That's not what we do. That's not what we're not buying here, because we're not. So if you trade the momentum, all right, if you trade the momentum, the odds are so that you might capture the quick stop loss here. So let me just put here the cross here, prohibiting the entry here. You are not supposed. You can do whatever you want actually. So maybe I'm a momentum trader. I don't know. All right, but I would prefer to maybe wait until it bounces a little bit, bounces down a little bit. So because I want to get a pivot point in many cases, in many situations, I want to get a pivot point, something like that maybe. I don't know. And that might get a pivot point for us. So if you position yourself ahead of the news, ahead of the CPI, that's a little bit risky because volatility, increases 3 times after the news publication. But if you do so, you may capture a pretty decent trade. All right, that's Euro USD. Okay, what's my take on US 30? US 30, which is a Dow Jones index, right? Why translation is not allowed? What do you mean by translation? I don't know. So you should ask support. I don't know about translation. Sorry, so I cannot answer you this question. All right, Wall Street Index, which is the US 30, so a lot of big companies, big tech companies, and including not only techs, but also financial companies, oil companies. They're all included in the Dow Jones Index. Industrial companies, basically, so they don't have such a big focus on techs like NASDAQ. By the way, let's compare it with NASDAQ, if you will. US tech. So US tech, NASDAQ is bouncing more aggressively, right? So it's had almost reached the peak, the all-time high, which was the all-time high primarily. US 30 is moving more calmly, so it's not that aggressive as NASDAQ. But basically, it might be maybe more interesting in terms of a spread, because, for example, if you go to charts, let's go to TradingView. I'll show you one. XLK. Well, let's put it here this way. So Nasdaq is QQQ, which is the ETF of technological stocks. Okay, maybe let's better put it this way: US 500 versus US 30. Okay, US 30. So we don't care of which provider is providing us with the quotes, but what we want to get here is the spread between US 500 versus US 30. And that's a spread. That's a spread. So US 500 as a, well, let's put here US Tech even. US Tech against US 30. You see that it's almost at the peak of the Bollinger, meaning that the rotation of the market is such that, well, now it's slightly below. Currently, the technological index outperforms the Dow Jones, so that moves like that. And another point is here. For example, if you put here XLK, that's a technological ETF, versus, for example, XLI, which is industrial ETF, we got the same situation. So technology outpaces the industrial sector. However, it's just not yet above the Bollinger. So whenever it will get above, the spread get above, we can say that the rotation might happen. We are pretty much close, but we're not there yet. We're not. When the spread will reach this destination, so probably we may think of an active buying for US 30. Until then, Nasdaq is more aggressive. I don't say aggressive, you know, that's a summer market. So for me, for my standards, that's not aggressive at all. So that's just slow markets, the dull markets, they are not tradable. But still it's more, you know, active at least than US 30. So at least it's more active a little bit. So it's not holding the rally, it's not sustainable. You see, it always displays false breakouts, always, almost always. But still, that's a slow but bullish trend. The US 30, the same situation, but it's not moving up, so it's basically consolidating. So most of the time it's just a consolidation. It's not moving up, it's not moving down, so it's rather consolidating within the range. So the best course of action for me, from my standpoint, would be to wait until to play the mean reversion activity. Meaning that you operate on a smaller time frames like 5-minute chart, and your preferred setup would be looking like that. So the market, you know, consolidates, then it comes closer to the peak, starts testing the peak, then it traces back, something like that. So for me, mean reversion activity will probably be the best course of action, because this market is not moving, so I don't expect it to break. I don't know exactly when it will go up, but at least we might anticipate the mean reversion activity. So whenever it breaks the high, whenever it shows that it's unable to continue the breakout, when it fails to sustain, so that might be the mean reversion setup. Just as it was showing here, for example, the same thing, by the way. So it was testing the upper band of the Bollinger Bands, it was testing the previous peak. No breakout is visible, as you see. The summer market, that's a freaking summer market, but you might actually use it as a potential short entry. Then the market sells off, you just buys it back. Okay, that's what you can do on US 30, on Nasdaq, I think. So nothing else than that currently. So at least we don't have huge narratives right now in this market. Guys, stop spamming here. Stop spamming, okay, about those tokens and other people. So I urge you not to react on that, right? So that's basically scam. It's scammy messages for those tokens. Don't react on that, okay? All right, let's move on. All right, let's move on. Let's move on. So what else do we have? So crude oil we were going through. So what else do we have? So basically summer market means that entirely, so the most of the markets are just consolidating. Just take a look at the US dollar index. The flow is just not enough for any swing trades. I think if you're a day trader, that might be interesting for you. The Swiss franc is the same. You see that it is losing volatility, it's just consolidating in pretty much a narrow range in the straight line. All right, so it will probably break sooner or later with increased volatility, because Swiss franc is what? Swiss franc is a carry trade currency, right? So currently we've witnessed the diminishing US dollar against the Swiss franc, so it's obviously in a downtrend right now. It was bottoming, so it was a bottom, new bottom. So now I think it's already 4 days of consolidation after the new bottom, right? So if I'm not mistaken, let's just calculate. That was a bottom. Then it was day number 1, 2, 3, 4. We're already the 5th day. So I would say that it's turning into consolidation. The active trend probably loses momentum here. So it wasn't an active trend, it loses momentum. If it stands, more than 4 days, more than 5 days below the low, it starts losing momentum. What does that mean? That means that it just starts rotating back and forth with this, dull action, maybe until it actually develops any meaningful move. For USD versus Swiss franc, so we've got some publications, upcoming publications, as you already know. It's core inflation rate on Wednesday. That might be PPI on Thursday, and a number of publications for that's margin requirements. That's not a news announcement. Okay, so this market is losing volatility, so you might try to track the breakout of this triangle, right? But I'm not sure when exactly it will break. But of course, that's a moment of loss of volatility. So that happens. So you see it's visible, it's obvious. The loss of volatility is obvious. I think you might need to give this market a little bit more time to develop this triangle or any kind of formation. Then it might break, expand. It might expand. So what you can do in this situation, you can patiently wait until it sells off. Then you might try to get on board. You may patiently wait until it, breaks out or breaks to the upside, and you may take the mean reversion back again. Okay, that's a mean reversion market, guys. You may take a couple of pieces here and here. That's a mean reversion market for day traders. That might be okay if you have the skill. You may do that. Otherwise, you need to sit on the sidelines, I think, patiently waiting, patiently observing for expansion of volatility, especially for such an instrument like USD versus Swiss franc. By the way, everywhere else this price action is visible. Euro USD, GBP USD, pretty much every instrument is visible here. Australian dollar versus JPY. One sec. All right. So Australian versus JPY. All right. So it's positioning just like crude oil. By the way, it's positioning above the Bollinger, above the 2 standard deviations here. That's a problematic point. Meaning that what means problematic point? It means that probably it will experience some difficulties with growth right now, and it's against the yen, right? So yen is pretty strong. It prevents any market from growing, basically. I'm very skeptical about the yen weakening, at least for upcoming period. It might weaken because I do think that still that's weakening is possible, but we don't see any evidence of that right now. So the breakout had happened in the night, then it had retraced. Now it's standing still at the peak. Well, I would say that probably if nothing changes here, it may slowly slide back to the range. slide back to the range, something like that, okay? Something like that. So I would, the best potential entry might be the false breakout. For example, it shows you the another leg of the formation, then it comes closer, test this, it might be triangle or whatever it is. So, and that might be your entry point. That might be your entry point, okay? That might work like that. So at least that would be my working scenario for AUDJPY. So unless it will break, so for example, if it will give you another leg, so that's an alternative scenario. If it will give you another leg, that would be an alternative scenario. That's a different story. That's a different story. That's not a shortable already. That would not be shortable. Until CPI, I think markets will stand still, they will consolidate. I don't expect very big movements, very advancement ahead of CPI, which will be happening tomorrow. All right, so I guess that we've pretty much observed everything, right? Gold, currency pairs, crude oil, Nasdaq and S&P, Dow Jones, Bitcoin. So pretty much we've gone through all the instruments. So thank you guys for coming. So I really appreciate that. Put us a like. Don't forget to subscribe to Exness channel. And yeah, I guess that come again next Tuesday. All right, that was Dan, senior trading specialist at Exness and trader since 2004. Come again next Tuesday. We will be continuing observing the markets, viewing the price action, and helping you to get prepared for the day and getting more knowledge about the markets. So this session was for educational purposes only, so that's not an investment advice. Make your own conclusion while in the markets. And I guess that's it. So thank you.